Good morning. Happy Friday, everyone. Welcome to the last WDA BizTalks of 2022. I am excited to welcome you to Insurance Needs Through the Stages of Your Dental Career with our host, Professional Insurance Programs. We are very appreciative of their support and look forward to learning from their team in just a moment. As a reminder, this presentation is being recorded. We ask that you keep your computers muted and that you turn off your video. We also encourage you to use the chat box at any time during the presentation to ask questions. The team will be more than happy to answer them throughout the morning. Now, without further ado, I'm very excited to introduce today's speakers. Christine is the team lead of the business division and has been with Professional Insurance Programs for 17 years. She assists our dental clients with their individual and group health insurance needs, as well as Medicare and other employee benefits. Craig has been with Professional Insurance Programs, personal lines for 7 years. He is the advisor of the team. He will ensure you have proper coverage on your home and auto, as he did for me. He will also make sure you are getting all the discounts available to you, including your WDA member discount. And finally, Jake has also been with the Professional Insurance Programs team for 7 years. His emphasis is on life and disability, professional liability, business insurance, and workers' compensation. He assists in finding WD members the best insurance solutions specific to their needs. And with that, Christine, the computer screen is yours.
Thank you, Candace. I appreciate the introduction. Like Candace said, my name is Christine Nadolski, and I am the benefits lead, team lead, and I'm here to explain the different stages of health insurance as you venture from a dependent all the way through retirement. So let's begin with our first stage. While you're in school,
Letting this run. I'm just here for the free credit.
Most individuals will be on their parents' plan as a dependent through most of their schooling. Once you do turn 26, you will need to find your own coverage, whether it be an individual plan or an employer-based plan. When you lose your dependent status, you have the option to apply through the marketplace to receive a premium tax credit or a subsidy based on your yearly income. The amount of the premium tax credit will be deducted from your insurance premium. This actually allows individuals with little to no income to secure coverage for very little out of pocket. If you do not qualify for a premium tax credit, you actually would be paying for the entire premium on your own. After you graduate, here you are, a new graduate. Congratulations. Now that you have graduated, it's time to start working for your new employer. While finding valid employment is the ideal plan, you will also be increasing your wages. This will take me back to my first point. This may actually make you ineligible for a premium tax credit on your individual plan. You must report your earnings every year to make sure that your income and your premium tax credits are still valid. Failure to do so actually will result in paying back the tax credits that you are no longer eligible for. As you can imagine, that would be definitely a shock to get that in the mail. You've landed your first job as a newly graduated dentist. Wait, don't cancel your individual coverage just yet. If the office offers employer-sponsored health insurance, you may have a probationary period to satisfy before you can be added to the group plan. Depending on the size of the establishment that you'll be working for, the probationary period could be immediate, the date of hire, the first of the month following 30 or 60 days, or the first day after 90 days. So please check with Human Resources or the office manager before you do cancel any coverage, because you could put yourself in a situation where you don't have any coverage. Now that you are established as a dentist, now we get to the fun stage. owning your own practice. Let's fast forward a bit. You have your own practice. Now you have to make the decision whether you are going to offer employee group benefits. There are so many options out there. How do you know which one is best? How do you know which deductibles are the best? The out of pocket, if you want a copay plan. Like I said, there's several different options out there. This is where being a WDA member is so important. Professional Insurance Programs is your agency that offers the exclusive WDA Association health benefits. Our agency and WPS have created a group health plan that is just for our WDA members, something just for you. Unlike the Affordable Care Act plans that they have on the market today that require 50% of the single premium being paid by the employer, you can decide as the employer what you would like to contribute, if at all. Benefits do vary from the size of your group. You can actually elect up to 4 different options. And our full-time hours are reduced from 26 to 30, or from 30 hours to 26 hours, excuse me. But of course, whatever your office says as full-time hours will supersede the 26 hours. This gives you, as the employer, options to customize your benefits the way you want and you need. We have 9 plans available, and we can go down to a 1-person group as long as we have full-time waivers. You've worked your entire life, and now it's the transition from working individual to retirement age. You've had a long and prosperous career as a dentist. Now that you will be turning 65, you're eligible for Medicare. You do have many options of applying with a Medicare Advantage plan or a Medicare Supplement plan and a prescription drug plan. Our agency can assist you with all of these products. We will help you decide which plan is best for your situation. Do you like to travel across the U.S.? Do you travel outside of the country? How many prescriptions are you currently taking and how are they covered? We will walk through and educate you on your options so you can be assured that you make the right decision for your coverage. Some of the most common questions that we get is, I will still be working past 65. Do I still need to apply? You may still need to apply for Medicare Part B. Part A is normally automatic, but if you do not elect the Part B, you can elect the Part B payout if you're still going to be working. This will allow you to continue working. Once you do decide to fully retire, that is when you would actually start your payout benefits. Most dentists will be subject to IRMA. IRMA is an income-related monthly adjustment amount. Being a higher earner, you will be subject to this if it is applicable to Part B and Part D, your prescription drug plan. Social Security will reassess your income every year and adjust your IRMA amount accordingly. If there is any adjustment in the IRMA, you will be notified directly from Social Security that your IRMA premiums will be adjusted and with the new premium. This is completely separate from your Medicare supplement premiums and your Part D premiums. Medicare actually will send you a quarterly bill for IRMA. This needs to be paid out of a personal account, not a business account. And if you are an individual with groups of over 20 employees, you can actually postpone your Medicare eligibility for Part B until you do decide that you want to retire. We do have some additional miscellaneous coverages. Other types of coverages depending on if you're going to be in between employers or taking a well-deserved trip to that exotic island or faraway destination that you've only dreamed about. Short-term medical policies are a great way to bridge coverage from one employer to another. These plans are not automatically issued, and there are some underwriting questions that you will need to answer before the policy can be issued. The coverage can be taken out for as little as 30 days or up to 364 days. Short-term medical plans are not renewable, but you can sign up for another short-term policy back to back. However, the total length of the policies cannot exceed 18 months in Wisconsin due to state statute. So talking about traveling, we have travel medical international health coverage. If you're planning that dream vacation, don't go anywhere until you've secured your travel insurance. Travel insurance lets you select your deductible, your out-of-pocket limits, and based on the plan available, you can have 1 million, 2 million, or 3 million. These policies, depending on the benefits you elect, are designed to cover you in case of medical situations, an emergency, trip cancellation, lost luggage, evacuation, and so much more. There are policies if you are vacationing, if you're a student or a scholar, if you're traveling for business, even missions, Marine captain, or government services, or if you're a global citizen, have dual citizenship. Another piece of the puzzle that a lot of people tend to forget until it's too late is the long-term care. Many people are surprised to learn that Medicare does not cover long-term care nursing home care. Medicare does not provide coverage for people who need to go into nursing homes indefinitely because they're disabled or can no longer take care of themselves. This actually will be a financial drain if you can imagine the cost of the nursing homes nowadays if you don't have the proper coverage. At younger ages, you're more likely to qualify for good health discounts. Plus, you lock in these savings even if your health changes and you're uninsurable. The younger you are, the lower the annual premiums may be. Typically, people start looking at long-term care around age 40. So that kind of wraps up our summary of what we offer in the benefits area. And we do offer dental and vision and long-term, short-term care as well. I would like to hand this over to our personal lines our personal lines manager. Sorry about that. It is my pleasure to introduce to you the team lead for personal lines, Craig Thompson.
Well, thank you so much, Chris, for that introduction and really sharing the valuable healthcare information. You know, you and your team just do such a great job with it all. And as everybody can tell, there are so many details in those conversations, really drilling down and getting to what everybody needs. Really requires that conversation. So thank you again, Chris. Again, my name is Craig Thompson, team leader and agent for the personalized division here at Professional Insurance Programs. And as you all know, part of the WDA. Today, I've got a total of 5 slides to share and talk over. And as you can see here from this initial slide, I'm going to be focusing in on and covering really 4 main areas. You know, the first is personal insurance versus business or commercial insurance, really the whys and whens and what's that all about. Next, liability insurance. Then I'll be talking about coverages throughout the 3 stages of life, you know, those early college years, building a career and your family while gaining wealth in the process. And finally, kind of crossing that finish line, right, for those retirement years, kind of what makes sense during those phases. Finally, I'm going to be closing out talking about claims. I have some nuggets to share about, well, the claims process and what any insured should do first. You know, certainly seeking the advice of your agent before contacting the insurance carrier that you're working with directly. So with that said, I hope everybody's on the edge of their seat and all good stuff. We'll go on to the next slide. There's slide number 2. And As a very broad overview, um, you know, there's for every household, it's just so different. There's no real cookie cutter here when it comes to insurance. You know, how many people are in the household? What are the occupations? Are there students involved? You know, what property is actually owned? And, you know, any risk history with previous claims and driving citations. Well, guess what? That comes along with it, right? Thankfully, we work with a diverse group of insurance carriers that really do offer a wide range and variety of insurance options for you know almost every situation, every household, based on their unique situation and what needs to be insured. Okay, equally important, they're all strong supporters of the WDA, and there's absolute reasons to work with any one of them. So they're all terrific, but you know, based on your situation, we may have to dial into one or the other versus some of the other ones. So when it comes to home insurance, what we're going to be talking about here is renter's insurance, your primary home, secondary homes, you know, those cottages, any rental properties that you may own, those duplexes that are rented out, and even motor homes. You know, on the auto side, you know, we can help insure anything that you're driving or having fun in, riding in for pleasure, certainly cars, motorcycles, ATVs, you know, watercrafts and more. You know, on the liability side, you know, we offer personal umbrella insurance ranging from $1 million to $10 million based on approvals. It comes in $1 million increments. It's really a lot of insurance, relatively low monies, and an absolute must-have in today's litigation-happy society. And as that last couple of nuggets there, we also offer flood insurance. You know, I'm curious today how many Floridians have the appropriate coverages with Ian hitting the other day. You know, question and thought is, you know, not everybody is properly insured and not all insurance promises are the same. So I can guarantee you there's loads and loads of issues going on there in Florida and the surrounding areas. And then finally, you know, coverage that is called builder's risk. It's a policy for when someone is about to build a home and until it becomes a full-blown residence that can actually be occupied. Well, you have to take out insurance before that hole is put in the ground. So that is very, very important to have. So we're going to go over to that slide number 3 and let's get started. When it comes to personal insurance or business insurance, rule number 1 should be, you know, flat out, there's no commingling allowed, right? It's either one or the other, but not both. And let me repeat that because it's worth repeating. There's no commingling. So many of us have financial advisors and accountants helping us with recommendations, and I get that, okay? They're trying to save their clients money, but from what I'm seeing, and I see this often on the auto side is a good example. I see when a business owner are looking for tax breaks, so they may title a vehicle in the company's name and insure that vehicle on the business side, thinking about that tax time and that dollar savings. Well, first of all, it may or may not be a commercial auto policy designation. And when it is, typically, you know, a commercial auto policy is going to be about twice as much in premium. So you have to be very careful. You may be trading some dollars here thinking it's a big savings. But the next problem I have with that is, you know, when vehicles are used on a personal family level, say 50% or more of the time, and it's insured as a business or a commercial vehicle, if an accident occurs off hours, a good, clever attorney may try to connect the dots there. And by having that personal auto tied to the business, well, there's assets there that are connected. And that is not a good thing to do. So, you know, if there's an at-fault accident, um, when you're driving any kind of a personal driving event, you know, whatever that may be, a good attorney is going to try to connect the dots, and that's causing some unnecessary exposure. Okay, so if you're using a car just as a commute back and forth to work, having it titled in your name and not the business, and adding to a personal policy is really the way to go. And I've had many, many of discussions on this, but In the end, the tax people are looking to save money. What we're trying to do is trying to reduce exposure and make sure that when the unexpected occurs, you folks are properly insured. So the question I also get related to business owner auto policies is who's actually driving. So if you do have a commercial policy, hey, guess what? And those people may, in your employ may be running errands, driving during work hours. Well, that's a totally different story. That vehicle must be titled in the business name, and it's certainly the right thing to do. But where people make a make a mistake here is that depending upon who's driving that vehicle, well, they need to be assigned to that car as well. And guess what? Their their all their personal information comes along with that: their date of birth, their driver's license, any driving history, claims, citations. It all gets accounted for, and the premium for what you're paying will be part of that equation. So the rate and the premium amount will be determined by all that driving history and all the people that should be allowed to drive that vehicle. I've worked with certainly many dentists that once they find out some of the driving history, they make different decisions. And instead of having 10 people have access to this, they narrow it down to 5 based on, some personal driving history. So I get that too. Now, regarding liability insurance, from time to time, I see some confusion here as well. I work with somebody for liability insurance, and as a business owner, well, they have liability on the business or the commercial policy, and they think that they're covered on their personal life and the risks related to their personal situation. Well, that's just not the case. So when I'm working with a potential customer, we talk about that. We make sure they're properly insured on the business, but hey, we have to make sure that they have personal liability in the form of an umbrella policy, have the right underlying limits on their personal auto and at their home so they're properly insured. Two separate and major areas. Again, no commingling. So just a quick thought here. If you know someone you're thinking about driving for Uber or Lyft or DoorDash, any of that, or maybe even doing an Airbnb, you have to check with your agent and the insurance carrier before you make that decision, because not every insurance carrier will allow you to apply that sort of risk onto their standard policy. It's going to require special endorsements, and at the end of the day, they may not even want the risk at all. So you'll have to find a new insurance carrier, for your home if you're doing the Airbnb, or even for that auto if you have a child or know someone that's going to be doing the DoorDash thing or driving for Lyft or Uber. So enough with that. We'll go on to slide number 4 here, talking about kind of the realistic coverages through life stages. And let's face it, when you turn on TV, radio, hey, for 2 minutes, you can't go without hearing something about an attorney and some type of litigation, regardless if it's motorcycles or trucks or you name it. It's all out there. Fact is, we're just a litigation happy society, and whatever stage of life you're in, you need as much insurance as you can afford, and that is a period. With a reputable insurance carrier, certainly, in a solid, responsive agent. In a general sense, when we look at the 3 main stages of life, I mentioned that college graduate era, the family career era when you're establishing and building your wealth, and then on to retirement. When you're building the wealth in the early years and enjoying it in retirement, you just can't put your life's work at risk. Bad things can happen any day, at any time, and at whatever stage of life that you're in. So you need as much as insurance as you can afford based on your wealth and what's at risk for you. It's an individual decision. It requires individual conversations to make sure your underlying limits are in line and you have a good solid umbrella on your side. Now, in Wisconsin, regardless of where you're at, if you're held responsible for an at-fault accident, a single car accident, or a multi-car accident, and you've exhausted your insurance levels, well, you're on the hook for that, whatever the judgment is, and your wages could be garnished for up to 20% per year until that claim is satisfied. and your assets are going to be under attack by any clever attorney representing the person or the people involved in that accident that you may have injured. And get, if it's a multi-car accident, well, those limits get eaten up pretty quick in today's medical world. So you may think that 200, 500, 250 are big numbers in terms of thousands of dollars for split limits, or 500, 500,000, and then 500,000 for property damage, the split limits. But in the medical world, they can get eaten up pretty quick. So again, make sure you have the right coverages for your autos and at home, because at the time of a major accident, there's no one anywhere that has ever said, they remember paying too much for their insurance, or, when the unexpected occurs, you need coverage, and certainly you better have it, because there's no going back. Once the accident happens, there's no insurance company anywhere that's going to change the coverages to allow for you to be properly insured. So it's unfortunate that's the way it works, and we have those conversations, making sure the higher limits and coverages are there. And on the other side, I've had to have those discussions where people have come back to me to say, hey, can we turn back the hands of time, and can I change the coverages? And unfortunately, I'm the one saying, I feel bad, but no, there's nothing we can do here. All right. So, finally on to slide 5 in claims, at the end of the day, you have insurance for a reason, but when it comes to claims, my suggestion is that you contact your agent and discuss what has actually happened, and really the best way to proceed. And a couple of points here I want to make, and here's why. For home claims, all too often I see people that think their home insurance policy is a maintenance policy, and it's just not the case. They call the insurance company directly, they've not contacted me, and they have a minor claim, perhaps a wind claim or something, where something was damaged, some property, maybe a couple of shingles turn off the roof. The payout ends up giving them $500, but they have $1,000 deductible. And so the entire loss was $1,500, and they're getting back $500. Well, I probably would have counseled them to, first of all, before doing any of that, do the research. You have time. Call a contractor, get an initial estimate or two, then gauge if you think the claim is going to be large enough to call it in, or take care of it on your own. First plan on getting your own estimate before hitting that panic button and calling the carrier about the claim. Now, my recommendation is, if you can pay for it, certainly do it if it's small enough. But hey, if the damage of the home or whatever's going on is not minor, well, pay the deductible, and that's why you have insurance. By all means, if it's significant, we would work with you to make sure that if things are properly covered, and we understand what's going on here, and we try to get the best situation for you. But the point is, there are times when you don't want to call the carrier and actually file that claim, because it's just not financially worth it. Now, the reason I say that is, from time to time this happens. Typically, for any household, you can only have 2 home claims in any given 5-year span or period. So, I see it where these minor claims were filed unbeknownst to us, without any sort of advisory role, and then something else happens, and now they're going to be non-renewed because 2 minor claims happen in a 5-year period. Any carrier will be working like this. It's 2 home claims to any level, and it's typically the 5-year period. I do see it from 3. Most of them are 5 years. So it's just something to be aware of here on the claim side. Now, on the auto side, very similar. Households can't have any more than 2 at-fault accidents over a 3 to 5 year period for all the drivers. So if you have 5 drivers in the household, I've talked to the home leads there, right? The dentists, and whoever the parents are, and they say, well, I only had 1. Well, yeah, but your you know, your 21-year-old daughter had one as well. Those are 2 at-fault accidents. They count against you, and you're going to be non-renewed. And any carrier, those are the kind of the rules that are never brought up. So you don't know the rules of the game before they happen. So that's why I'm sharing some of this with you. Again, call your agent, have that discussion, find out what the next steps are. And, you know, if someone clearly hit you and they're witnesses, perhaps the police wrote up a police report, then have your agent file the claim with the other party's insurance carrier, the person that caused the accident. That way, you know, you can save some issues down the road with your deductible being paid back after the 2 insurance companies work it out through subrogation. You know, typically that takes 6 months to a year later when the 2 insurance companies agree and work it all out. So a couple of major things there on claims, and we're certainly here to help should that be the case. So, you know, that's really it for personal lines. I want to thank you all so much for logging in and listening. You know, we do a lot of great work here at Professional Insurance Programs for our personal line client members. So if anyone needs any help, would be interested, just contact me later, and we'd be happy to have those conversations. So now, next up, I have the honor and privilege of introducing Jake Ream. Jake is responsible for our life and disability insurance program as well as commercial insurance. So take it away, Jake.
Thank you, Craig. Appreciate the intro, and kind of echoing what everybody else has said. Appreciate, you know, everybody kind of taking the time here on a Friday to sit down and kind of talk through some insurance with us. Kind of like Craig alluded to, I'll be covering the commercial aspect of things first. So basically all types of coverages tied to your career, both as a dentist and as possibly a practice owner. And then from there, going to more life and disability. Tends to be a lot of questions there, and kind of can keep that high level because those are very specific kind of situations at times, as we'll kind of get into here today. But kind of starting out, you know, our goal, as you've probably seen in the theme today from Chris, Craig, is always trying to be a resource throughout your entire career. And that starts with me, at least down at the school, down in Marquette. Not sure how aware maybe all of you are, but we actually have a program in place down at Marquette currently that ensures all 400 dental students while they're in school, regardless of health history, things like that. They're automatically enrolled just by being a student down there. It's actually a great additional benefit that Marquette will kind of amplify to their potential applicants at times even. And that's actually something that's covered by the WDA from that perspective there. We also will see occasionally some moonlighting, things like that during school. And then as they kind of start to transition into their career, that's when we kind of start talking about the individual disability, the malpractice, possibly even life insurance, kind of depending on where they're at in life, varying degree of people coming out of school. So that may apply to some already, others it may be down the road. And then, of course, working with you all the way through owning your practice. Again, the malpractice, the property, the business owners, the work comp, all that good stuff. And with that being said, kind of transitioning over to the commercial side, always like to start out with the malpractice. Obviously, that's something that every dentist needs, regardless of their status, owner, associate, independent contractor, whatever it may be, you all need the malpractice. There's 2 common types out there, occurrence and claims made. Occurrence has certainly grown in popularity over recent years compared to the claims made, but both will properly protect you. They just differ on how the coverage will respond to a claim. With an occurrence policy, that's triggered the moment treatment occurs, regardless of when any claim is made. So for example, if the claim is made today in 2022 for some treatment that was done in 2019, that 2019 policy is going to be the one that responds to that because that was in place when the incident initially occurred, hence the name occurrence. On the flip side, with claims made, that's going to be triggered when the claim itself is actually made. So kind of that same scenario, the claim is made in 2022 for an incident that took place in 2019. That 2022 claims made policy responds as long as it's, applicable to the retroactive dates and everything like that. So as long as coverage is valid, both will protect you properly, but there's just a subtle difference on how the policy will maybe respond or which one will respond at the time the incident occurs there. We also, I want to briefly mention on the malpractice side for the practice owners that are in here. We do have a first year free program for the malpractice for all of our new grads that are practicing in the state of Wisconsin. So as long as they're just out of school, even if they went down to school in another state, if they're practicing here in Wisconsin, they will qualify for the first year free program at that time. Moving on from that, kind of the next big one, obviously, is you kind of transition into that ownership phase, buying that beautiful new practice, that new building, everything like that. That's when your business insurance will come into play. That's kind of your all-encompassing policy. You can kind of view that as a practice owner. It's going to cover everything for two areas: the malpractice that we already mentioned, and then of course work comp, which we will get to in a second. Kind of everything else is going to fall under this business insurance umbrella. So that's going to be your building, your all your personal property, your general liability, all that good stuff. In addition to some other key areas that I really want to highlight that I think are the biggest growing exposure for our practices and where we're definitely seeing a major uptick in claims activity. The first one being employment practices liability. This will cover things like sexual harassment, wrongful termination, discrimination, kind of all the things that kind of fall into that window. Don't have to watch the news for too long over the last couple of years to realize that those claims are very much on the rise. And it's not just with, well-known or famous people. We have certainly seen our share of those claims, over the years, especially during a ownership transition. That can be very common, right? Where we'll have a long-term tenured established owner. All of a sudden, after 30, 35 years, they're selling a practice. Somebody new is coming in, but the staff is still remaining from that previous owner. They may be very used to doing things one way. New owner wants them done another, which is his right now as the owner of the practice. And that can cause a lot of friction, a lot of things like that, that can eventually lead to maybe claims falling under this employment practices liability window. We work a lot with West Bend Insurance when it comes to business insurance for our practices. And a big reason why is they have much more enhanced limits for the employment practices liability compared to a lot of competition out there. Most competition caps this limit at $10,000 without having to pay through the roof to bump it up. West Bend starts at $100,000. They'll do $250,000. And this coverage includes defense costs, which you can probably imagine 10,000 can rip through pretty quick when it comes to the defense aspect of things there. So the enhanced limits with West Bend will certainly have you much better positioned to kind of address a claim like this. And the other one that's really growing a lot in exposure, which I'm sure people are very aware of, is cyber. I'm sure maybe even some people in here were impacted by the cyber incident a few years ago. As we get more and more dependent on, cloud-based services, the internet, everything like that, the exposure for cyber is only growing as time goes on. It's never going to shrink moving forward. And kind of actually jumping down to the standalone cyber piece there, we're seeing more and more people go this route. While cyber is built into your business insurance, those benefits those coverage limits that are built into that package specifically for cyber may be capped or somewhat limited. A lot of the commercial carriers don't seem overly anxious right now to be just going full blown like cyber coverage at a reasonable cost when it's built into your business insurance. So we're actually seeing a lot of people starting to go, and a lot of our insureds as well, go with the standalone cyber option. It's going to provide you much more comprehensive limits. It's going to sometimes be 10, 20, 30 times the limits on a standalone policy that compared to what you get in your business insurance. You're already paying, $200-300 on the business insurance for that cyber. So people are assuming that the standalone policy is going to be, 10, 15 times the cost because you're getting so much more coverage. we're not really seeing that. It's, maybe 2 to 3 times what you're paying on the business insurance, but you're getting, like I said, 10, 20, 30 times the limits. So you're getting much more expansive and comprehensive coverage. So if you're a practice that's very big on digital, on, cloud-based backups, things like that, and you haven't at least looked into a cyber or standalone cyber policy, that's definitely something you need to have on your radar in the relatively near future there, because this is only going to get a bigger exposure for you there. And then lastly, I'll quickly mention it because it is straightforward, but it is something you need as an owner, is work comp. It's a state regulated coverage. If you don't get it, you get fined. And I can assure you those fines are a lot nastier than the premiums are. I mentioned that because I work a lot with a lot of new practice owners, and sometimes they kind of overlook this or don't think about the need for work comp. Even if you just have one employee, it doesn't matter. You need work comp. Like I said, mandated by the state. It's obviously going to cover all employee injuries on the job, things like that. Pretty straightforward from that aspect, how the work comp is going to work there. Kind of moving on to the life insurance aspect of things. There's 2 kind of common types or common terms that we'll typically see people kind of throw out there. I'm sure you probably heard a lot of these yourself. Term and whole life. Both operate very differently. I kind of always use the analogy here when it comes to that of you can kind of view term as akin to, renting an apartment. You have this lease for this duration of time. You get to live in there for that time. Once that lease is up, you're out. It's the same thing with the term policy. 10, 20, 30-year term, whatever it may be. Something happens during that term, of course, benefits are paid. If, fortunate enough to kind of live through the term, at the end, things just kind of go away. And at that time, you either re-up for another policy, maybe the need has shrunk a little bit at that point, whatever it may be, but you basically have to determine and take next steps. Term is something we see a lot early on in the career, especially when, budgets are a little tight, things like that. Death benefits are the main focus. Term insurance fills a great need there. It's also a very useful tool. We're starting to see a lot of banks in the last, 2 years or so, probably, for new practice purchases, sometimes even refis or build outs, whatever it may be, that as part of the additional collateral, they are starting to require some sort of life insurance securing that. So if you already are set on the personal side for life insurance, don't touch that. That's for your family. That's for you. That's for your legacy to leave behind. Take out a basic term policy that covers that loan, and that'll satisfy everything from the bank's needs. On the other side of that is whole life insurance. So this is going to be a much more comprehensive product. The cost is, obviously, you can imagine, looks much different than term insurance because it's going to run for your whole life. There is no set term in terms of the whole life. And you get some 3 big guarantees that I kind of point out on the whole life side. The first one being a level premium. Age is the biggest cost factor for both life and the disability we're about to talk about. The older you are when you take out coverage, the more expensive it'll be. So by locking that rate in, you can lock it in. It's referred to as a level rate. And if you're, let's say, 37, the price you pay at 37, you'll pay at 47 and 57 and so on. That'll never change. So you're locking in at the best rate, and that's guaranteed to stay level throughout the life of the policy. You're also guaranteed a death benefit at any time. As I said, this is whole life insurance. There's permanent insurance. It'll last forever, basically until you cancel it or just for some reason maybe stop paying for it. And for that reason, a lot of people will sometimes use this as a estate planning tool to help, liquidate taxes, estates, things like that. There's obviously a lot we can get into on that. And if those are ever questions there, we can go over them. But for a conversation like this, there's a lot of detail that goes into that. But that is a very commonly used estate planning tool at that standpoint. And that is because of the guaranteed death benefit. That same guaranteed death benefit is also a big reason why sometimes we'll see it used in buy-sell agreements, things like that. we'll see both whole life and term used for a buy sell, and really kind of the age of the partners, maybe the age gap, how much longer they'll be there. There's a lot of factors that influence which way, but both term and whole life can kind of fill that buy sell need from that perspective. And again, that's because of the guaranteed death benefit aspect. And then the last thing about whole life is it builds cash value inside the policy. So potentially additional assets, in addition to whatever you may be using through the market, retirement, the normal kind of traditional vehicles that are out there to kind of accumulate that wealth, things like that. Cash value can build inside these whole life policies as well. And that's why a lot of times, the same way I link term to renting, I link whole life to owning a house. You build equity in it the same way you build equity in a home. So that's the third kind of final guarantee on the whole life aspect there. And then, of course, on the bottom there, like it mentions, you can use this for a number of things, but it's individual or business. And either way, they're always going to be tied to building a legacy, whether it's debt protection, income replacement on the personal side, like I said, on the business side, funding a buy-sell agreement. Also, a lot of times we'll see this for key man insurance, which maybe you have, as an owner, you have an associate who's producing a bunch of money, and maybe the hope is that someday they'll buy in, but maybe income-wise or one reason or another, they don't have those means to do so right now. But they still want to be an associate, and you want to keep them locked in there as an associate. You can actually take out what's called a key man policy on them. The business would own the policy and also be the beneficiary on that policy and make the premium payments, so that if you do lose that high income producing employee, the business is then kind of reimbursed to help hire a new employee, obviously help fill that void from income, things like that. It can provide a lot of key things for the business and frankly, goodwill for the employee. You can split that benefit where, let's say it's 80-20, 80% to the business, 20% to the deceased employee's family. They're going to appreciate it. If you come to them one day and tell them like, hey, I'm taking this out on you because you mean so much to me. And not only that, but I'm actually going to give some of the benefits to your family. You're going to have an employee forever. They're going to absolutely love you for that. They're going to be floored and blown away. It's one of the biggest things a employer can do for an employee. And that's funded through life insurance. And kind of moving on from that into a very similar and related one, disability. Disability, in my opinion, it's the most important policy you'll take out in your career. It hands down protects your biggest asset, which is your ability to earn an income. There's not many jobs, and I tell this to, people just out of school right away and everything. There's not many jobs that from day one are going to be paying somebody in the six figures. And granted, there was a lot of time and a lot of money invested to get to that point. You've worked hard, you've earned that right to be earning that income at such a young age. That most people are looking at career earnings between $2 and $10 million. This disability is going to protect that number. I mean, that's a massive number. A lot of times when I ask people, what's your biggest asset? I'm sure even right now, if you thought about your biggest assets, the first things that probably pop in your mind are house, car, maybe vacation home, whatever it may be, things like that. All things too, by the way, that you are very quick to insure, as you should be insuring, because they are major assets. But what provides all of those things? Your income. If your income goes away, those things go away, whether they're insured or not. If you can't afford to pay for them, they're not going to be around anymore. Disability is going to assure that your lifestyle and your income is protected. And just like life insurance, it can do things on the individual or the business side. And on either way, there's always two things I tell every single dentist I'm talking to when it comes to disability. If these two things aren't in there, that's not a disability policy that frankly you should have, because you're paying for something that's not going to protect you the way it should. The first one being what's referred to as true own occupation. In dentistry, there's a lot of musculoskeletal claims. It can make dentistry very hard to practice with some of those things. Frankly, I saw it firsthand. My dad was a general dentist in the Milwaukee area, and he had to sell his practice at 40 because he's very active growing up, played sports, college basketball. He wore out his ACLs. By 40, he had to sell his practice, get out of dentistry altogether, started an asset management business out of my parents' house, totally unrelated to dentistry. in every way possible. No matter how successful that new business ultimately became, if he had a true own occupation policy, that entire time he was working the new job, he would continue to receive his full tax-free benefit every month from his disability policy because he's dealing with an injury or illness that prevents him from practicing dentistry now. So that's a huge deal, a huge bonus to get because it gives you that flexibility, right, to determine, well, I can still do something, I don't want to go stir crazy, things like that. If it is a musculoskeletal type claim where you can still be somewhat active. Now, obviously, some claims you'll be unable to work whatsoever. But regardless of if you've gone on to a new profession or not due to disability, you're going to get those full tax-free benefits every single month up to age 65. The other big thing is what's referred to as non-cancelable language. This is something that's overlooked a lot. With a non-cancelable policy, your rates, your coverages, everything like that is locked in and guaranteed from the day you commit to the contract. Disability is like any other product in the marketplace where from time to time, carriers reevaluate offerings. They make changes, they make updates, and they may take away features 5 years from now that are a big reason why you took that policy out today. Because of that non-cancelable language, you're insulated from those changes they make to future policy offerings to dentists, and you're kind of grandfathered in to your old plan the way you wanted it to be. Again, with this practicing or protecting your biggest asset, you don't want anybody but you having the ability to change terms, change costs, anything like that. So that's why I always like to mention those two items. Disability too is probably more than any other product out there the most tailored to you. It's based on your income, your health history, how you value optional features, riders, things like that, especially those first two items, the health and the income, nobody can match you exactly on those two items, right? So this policy is going to be geared specifically to you to address those things to make sure you're properly protected. It also does include some optional features like coverage for partial disability, where maybe you've had to cut back hours or maybe procedures just taking a little longer. That's going to have a direct hit on your bottom line. Partial disability will help bridge that gap. We certainly have a number of dentists who are on claim, but also still working right now. That's actually somewhat common in the dental world. So partial disability is a huge aspect of things there. And on the practice side of things, as a business owner, there's also what's referred to as overhead disability. The same way if you're disabled, your individual will pay you to protect your income. The overhead disability will pay you to protect practice expenses. And the nice thing about overhead policies are they can be owned by the practice, and they can also have the premiums paid by the practice, which will make which of course makes the premium tax deductible for you as a business expense. Now, you don't want to do that on the individual side. You never ever want to pay for an individual policy with business funds, because that can create some taxable events for you on the back end if you need to receive those benefits. And the last thing you want to be doing is paying the tax man when you're receiving benefits, because obviously that means an injury or illness has occurred and you're going to be counting on that money. But on the overhead side, on the business side, it is deductible and does not have those same tax consequences. That's a huge policy to run through the practice. I feel a lot of people understand, they know the individual, but the overhead piece gets overlooked a lot. Your expenses are 30, 40, 50,000 a month. I mean, how many months without your production could the lights be left on? Could salaries be paid? Could rent be made? The overhead's going to protect that. And it also includes an optional feature that has really grown in popularity in the last 2 years, kind of similar to what I mentioned with life insurance and securing collateral. We're seeing disability required a lot now too. And I tell people all the time, the same way you shouldn't pay for your individual with business income or with the business expenses, you also should never sign over your individual policy to a bank for collateral. But at the end of the day, if you're disabled, I kind of ask people, would you rather default on yourself or the bank? If you sign that policy over to the bank, your individual disability, you're going to be defaulting on yourself should you become disabled, because they're going to get that benefit every month to cover whatever your loan agreement is with them. And that's where this overhead policy also comes in. It has an optional feature that's referred to as business reducing term that'll literally pay you an additional benefit that lines up exactly with the loan. If it's a 10-year loan, $7,000 a month, and you're disabled 2 years into that loan, it's going to cover those remaining 8 years with that feature and not touch the overhead benefit or anything on your individual side. This has become a very popular feature and definitely something that if you're considering additional practice purchases, a first-time practice purchase, anything like that, to have this in there, whether it's required or not. We have people that take that out even when it's not required by the bank, but certainly when it is required, this is a great way to protect your individual income. And the last thing I want to mention that's kind of tied to business disability is disability buyout. Kind of like I mentioned, the life insurance with the buy-sell aspect, where, you have two partners, they take out life insurance on each other. So if one partner prematurely dies, they can buy out their stake in the business and not have to come up with the funds themselves. Statistically, disability, you have a 1 in 4 chance of being disabled during your career. There's a better chance that that's going to happen than untimely death. And this part is extremely overlooked. There's minimal practice partnerships that have this, and this should be a must, is disability buyout. It's going to operate the same way as a buy-sell with life insurance, where the only difference being disability now, right? Once they're disabled for a set amount of time, typically either 12, 18, or 24 months, whichever kind of determined beforehand, once they're disabled and out of work for that long, it triggers the disability buyout to kick in. And at that time, the healthy owners are paid a lump sum to turn around and buy out the disabled owner and his family. So they could, one, kind of figure out their next steps with the practice, right, and not have to come up with collateral, kind of the same concepts, the same reason as you buy the life insurance on a partner. And I think it's just the way it's marketed. Everybody's so quick for buy sells to go to life insurance. Nobody even ever mentions the disability until I bring it up. But the disability has a much greater chance of interrupting or disrupting your partnership than an untimely death would. And the disability buyout is going to address that directly there. Then kind of moving on to the last thing that I kind of had quick was there's a bunch of FAQs that kind of people wanted, I know ahead of time, kind of addressed in terms of life and disability. The first one being male versus female rates. Kind of unique on that end of things. When it comes to disability, females will be 35%, roughly 35% more expensive than males. So if you have two dentists, they're both 30 applying for the same benefits, same coverages, and one's female, one's male, the female's paying 35% more. On the flip side, when it comes to life insurance, females are 35 to 40% cheaper than males. So you do get it back in the end. It's just you get it back in a different place, but in a somewhat related field there. But that's kind of the difference. And that's a pretty common question I'll get a lot from younger dentists, because they'll talk to a colleague of the opposite sex and be like, wait, hang on, how is this so much different? That's literally the only reason why is the male-female piece there. What's the best life insurance product for me and how much coverage do I need? For what's the best product, it's going to depend on your situation at that time. Term's going to make sense in certain situations, and in other situations, whole life's going to make sense. For most dentists at their peak of life insurance, they're going to have between $3 and $4 million in benefit. And that's going to be made up of multiple policies. When I first see that number, people's eyes kind of get big sometimes. That's not necessarily always added at once. It's taken over time with a few different policies. And a lot of times life events will trigger it. Kids, taking on additional debt with a mortgage or a practice purchase, family legacy planning, things like that. There'll be different life events that are triggering that and taking out additional policies. And kind of at their peak overlap, most of our dentists will be between $3 and $4 million. And of that, it'll be made up of a combination of term and whole life policies. I kind of always use like this sandwich analogy. The term's the bread that kind of gets you started, that kind of lays the foundation, gets things going. And then the whole life is the peanut butter and jelly. Kind of rounds everything out, brings it together, gives it that extra kick, makes it a little stronger, everything like that. So a lot of our people will kind of have that hybrid of those two policies there over time. Kind of on the same lines, disability, the magic number for coverage. Typically, benefits are going to be set to roughly 60% of your income because it's a tax-free benefit. Now, you might get a very degree answer in terms of what's the magic number. In my opinion, the magic number is that number, what you qualify for. This is to protect your lifestyle. If you take a benefit that's half of what you could be qualifying for and make based on your income, not only you, but also your family's taking a step back. Then if something happens, keep in mind, if you're getting benefits, something's happened. So you're going to have new medical bills, new medical costs that's going to eat at this benefit. You don't want to be shorted it, and you want to be properly protected in that way. Do I really need it? I would say that of all the coverages, this is the biggest no-brainer would be disability. Like I said, it protects your biggest asset, your ability to earn an income. If that income goes away, what's life going to look like? Can you afford to go 12, 18, 24, 36 months without income? The average disability is just under 3 years in length in terms of how long does it last. What would your life look like if you went 3 years without income? What would it look like if you went 13 years without income? Even if you went 3 months without income, that could look vastly different. And you have a 1 in 4 chance in your career being protected. If you go through your career and don't get disabled and you pay those premiums, you could view that as maybe a little mistake. If you get disabled and don't have disability, that's going to be a major problem. So it's kind of like, which side of that coin do you kind of want to be on at that point? When should I get it? We're always telling people down at Marquette, the younger you can get it, the better. As I mentioned earlier, age is the biggest premium factor. So the longer you wait, it literally only gets more expensive as you get every year you get older. Not only that, but traditionally, in most instances, you're at your healthiest when you're at your youngest. So that's going to allow you to qualify for the best plan possible with the fewest modifications, restrictions, exclusions, anything like that. By applying at your youngest age, you can get the best rate and the best coverage possible. So the sooner you apply, the better. We've already mentioned it a few times, but 1 in 4 chance of being disabled in your career. 25% is pretty decent chance. Is there a chance I can get declined for coverage? Yes, there is. People think health insurance, or I think a lot of times people think disability is like health insurance. Oh, if I got health concerns, like, yeah, they'll give it to me. They'll just maybe charge me more or, kind of jack up my rates. With disability, that's not going to happen. When you go to apply, it's going to be 1 of 3 outcomes. The first one is the most ideal. You're approved as applied. You get everything you applied for, no modifications, no exclusions, anything like that. That's always what we're looking for. The second outcome is what's called a modified approval. Let's say you are approved for coverage, but you've had a long history of back issues or maybe knee issues or something like that. They're going to say, oh yeah, we'll cover, Dr. Jones for everything but her back. She's had, a few surgeries on it, just hasn't healed correctly. It looks like there could be some problems down the road. So we're not going to cover that. We're going to protect the rest of her totally as normal, but for any specific back issues, those will not be covered. That would be an example of a modified approval. And the last outcome is a straight decline. Obviously the least ideal, usually because there's just so much in the health history that they're just like, no, we're not. Their carrier is not comfortable writing it. This happens 15% of the time. So I'm always telling the people down at Marquette, there's 100 kids in each class. Every year when I give presentations down there, so there's 15 of you in this room based on stats that just can't qualify for disability already based on it. So it's not a given. And that also kind of ties back into the question of when should I get it? That's a big reason why the sooner you apply, the better, because it's going to only increase your chances of approval at that point. I know I kind of hit on those kind of quick at the end, but I also know I kept you guys a little longer, so I do apologize for that there. But I do appreciate your time today, and with that, I will pass it back to Candace, I believe, to wrap everything up.
Thank you, Jake. Thank you. That was fantastic. Craig as well. Christine, we appreciate your time. As Jake mentioned, we did go over a little bit, but if they're willing to stick around and answer any questions, let's take them. Team, want to stick around?
Yeah, if you have questions, I can hang out for.
Okay. Jake's willing to take some questions. Otherwise, you can definitely reach out to them via email. I know we have their contact on the WDA website. You can always give us a call too. We can get you in touch with Jake and Craig and Christine for those questions. But we'll give it a minute here to see if anybody has anything in the chat box. Feel free if you want to pop on your video too. You can ask questions that way since we're at the end. Otherwise, as I mentioned, thank you to the Professional Insurance Programs team for joining us today and answering all of these great questions that we've had leading into the program and just some overall great content. So it was super helpful. right, I don't see any questions coming in. Seems like, oh, here we go. What if you pay for disability personally? Can you get returned by the business? I believe is the question. Oh, refunded by the business.
Yeah, so basically like reimbursement. So that could be viewed though as potentially then like an employer paid, benefit at that point, which then can also turn into some taxation things. Even if it is after the fact, on the back end, it just gets into a little bit of like cloudy territory on that like just hate to have that kind of surprise. That's why on the individual side, whether it's actually life or disability, always encourage just to pay with after tax dollars from your account, from your personal account, because that'll guarantee no taxable event can be created on the back end when receiving benefits.
Dr. Heel, does that help answer your question? Great. Anyone else have any questions? Feel free to pop them in the chat box. All right, looks like everyone's free to enjoy the rest of their Friday. Hope you can spend some time outside before it gets cold again next week. And thanks again. Have a good one.